All right, welcome back to the Bitcoin Battle, where I'm your host, as always, Frank. I'm the crypto optimist. Joining us, as always, is my dad, the crypto. I guess I call him the pessimist, but he's the skeptic. And today we have my dad's good friend, Mike, who is a retired. What would you say you're?
I was a certified financial planner, and I
Okay.
made my living advising and managing client portfolios, investment
Oh,
portfolios.
cool. So I'm getting into crypto the past couple of years. I'm just a regular old guy who I'm a filmmaker. I saw some cool stuff in the crypto space, and me and my dad argue about it every day. So we thought we'd record it and put it out there for everybody else. And Dad, if you want to talk about your background a little bit, and then we'll go into Mike.
I've been an entrepreneur most of my life. Retired early, went to graduate school for getting an MBA and a PhD in psychology, which Mike also has a PhD in psychology. So maybe this will be interesting today when we analyze Bitcoin psychologically.
Yes, this might be a little bit of a tough one. This one's on my dad's side for the Bitcoin battle. So, Mike, if
Well,
you
we'll
want to
see.
tell us, yeah, we'll see. Maybe I'll be able to convince Mike to invest in Bitcoin by the end of this. But Mike, if you want to start by just telling us a little bit about your background, how you got into financial advising and all that.
Sure, I went to the University of Connecticut and I got a master's degree in school psychology, and then I continued on and I got a PhD in educational psychology, and the focus of that degree was really statistics and tests and measurements. I worked for a few years as a school psychologist and enjoyed it, but didn't see it as a viable long-term career. I needed to make some money, so I got certified as a certified financial planner, took Series 7 license exam, and whatever was required of me to offer myself out as a financial planner. And I spent 35 years working in that capacity. And I just want to note up front here that I'm not here today offering investment advice or financial planning advice. I'm fully retired. And as part of that retirement, I have agreed not to give financial planning advice. But I can still talk in general terms of what I think.
Yep.
So I just want to make that clear.
Yeah, it's a good
And I've been,
disclaimer to
I've
put
been
out there.
Yep, I've been retired now. I'm going on my third year, and so far I'm crushing retirement.
Nice. I saw some video of you surfing. I was like, holy cow, he's like really surfing some big waves. Wow.
Thanks.
Yeah. So where was that? Where were you at? You were in
Most recently, I was in Tortola in the British Virgin Islands, and we had an epic run in March. March was I've been going there for a long, long time, and March was as good as it gets down there. So I was pretty excited.
yeah. Look fun. So so tell us a little bit about I guess your financial consulting, like what exactly did you do for people? Like what types of clients did you have? What was some of the general advice you gave to get started? And I would imagine during that time there was no cryptocurrency out there. So, so
Yeah,
talk a little bit about that.
not till the very end. And at the very end of my career, I think we were allowed to. I kind of forget, but I think there were some mutual funds or exchange traded funds that had a basket of cryptocurrencies in them, and maybe the last year or so of my of working, I was allowed to use them. But for most of my career, which began I think in 1985,
Mhm.
I had clients from age 18 up to age 100. Some clients invested $50 a month. Some clients came in with millions of dollars. And generally, I would I would kind of follow the same procedure. I try to get to know the client. I used and relied on, I had a risk tolerance assessment device that I would use to kind of get a measure of how much risk a person was willing to take in terms of volatility of their investment portfolio, what their time frame was like, what their tax situation was like. And based on their answers, in that profile, I would make a recommendation. Most of my recommendations were a basket, if you will, a portfolio, a mix of equities, stocks, bonds, cash, real estate, and hard assets like gold would be an example. And so a very young, risk-oriented, aggressive investor might have a portfolio that was 90% equities or 85% equities and 10 or 15% on the more conservative side. An 85-year-old widow might be just the opposite, almost all in cash and bonds and just a little bit in equities.
I would imagine. I'm going more risky with my investments. I plan to be more diverse when I have a little bit more money, but like I think the reason that I was attracted to crypto is because of the gains that are possible, you know what I mean? And so I was like, you know what, I don't have a lot to work with. I might as well bet big on this, and if it hits, it's a big gain there, and if it doesn't, then oh well, it's not like a ton of money. So I figured, all right, it seemed attractive to someone like me. So but
one of the risks I always feared in going too aggressive with a client was if they didn't work out, then that client would say, I tried investing once and I lost my shirt. I'm never going to invest again, and I'm just going to keep all my money in a bank for the rest of my life. So I was concerned and cautious about that happening. And I had, if a client insisted, we would go all out and put everything in equities. But there's two kinds of risk. There's systematic risk and unsystematic risk, or market risk, business risk. And so, let me get this straight now. Market risk is the risk of the whole market. Like if the whole stock market goes down, it doesn't matter if you own stock A, B, or C, it's going to go down in value. All right. That's the market risk. That's the systematic risk, I think they call it. But the unsystematic risk, the business risk, you can kind of diversify away. And, rather than put all of someone's money or your own money into one company, say one stock, you diversify that and you put it in 20 or 40 or 50 companies. If that one company falls apart, or there's a management change or management collapse, or the product becomes obsolete and that stock price falls, you've got another 20, 30, 50 stocks to kind of hold you up. So, what I hear you, and you can do that across all asset classes as well. I hear you
that's
saying,
what I'm
like,
doing in crypto.
I'm
Yeah.
all in, I'm going in crypto, and so that you're subject to market risk of crypto.
Correct.
And you're also subject to business risk if you don't have any stocks, you don't have any bonds, you don't have any cash. So those are the risks that you face with the approach you're taking.
Yeah, I'm with crypto. I'm mostly in Bitcoin, and like I'm probably 60% Bitcoin, maybe 30, maybe 25% Ethereum, which is the second biggest one, and then the rest I'm spread out over a bunch of like bigger projects within the space that I feel are good projects. So that way, if one of those hits it real big, then it kind of brings it up with like Bitcoin or Ethereum. But if one, because there's a million different projects within the crypto space, if one just fades away, okay, that was only a few $100s or something, so it's not a big deal. Hopefully,
Actually,
the other ones, the ones that do hit it big, should even out a little bit. But
it's not a million,
again,
it's 10,000.
What?
10,000 different altcoins.
There's more than that.
Or
I think
maybe
it's
it's
like
12 or
22 or
something.
30 or
Well,
something. I think it's, yeah,
Gary
it's
Gensler
crazy.
said 10,000 recently.
Yeah,
but
but that was, when was that? That was like,
I think this was during this was during the testimony the other day in
really?
Congress.
I
Yeah.
think it's more than that.
Whatever
Yeah.
it is, it's ridiculous.
It's a lot.
It's
It's a lot.
ridiculous. It's a lot. And these guys have initial coin offerings.
Yeah.
They've raised like one guy wrote a white
ICO.
paper. Yeah, and he put out coins. He raised $38 million in like 2 days. People
Yeah.
buying his coins on a
It's a
white
lot.
paper. That was it.
Let me tell you what I used to share with my clients when I made a recommendation to them, and see if any of that applies to your decision about using Bitcoin or Ethereum or whatever. So I used to use something, there was a company called Capital Research, and they had a family of mutual funds called American funds. And the reasons that I used them was they began back in 1930 or something. So they had a long track record. They tended to be value investors in the sense that they looked at the earnings of a company before they bought it, and they had like a parameter of, they didn't want to pay a stock price that exceeded a certain value in terms of price to earnings ratio. So they tended more towards value than growth, say. The other thing they did that was really unique is they didn't have like one person or manage the fund, and it wasn't a committee that managed the fund, but they had a group of portfolio managers, and each manager got a piece of the portfolio to manage on his or her own, and then their bonus and the size of the pie depended on how they did relative to the market and relative to the other people around the table. Over a long period of time, like I think it was a 5-year evaluation, so they weren't like quarter to quarter. They also were very careful to be tax wise. They didn't have a lot of churning in the account, so clients weren't getting whacked with unnecessary taxes. And that may have been it, but that was usually enough to convince me and to convince a client that was a pretty good fund group to use. The track record. Oh, and the other thing they did is they did it cheaper almost than anybody. Vanguard was probably the only fund group that managed money for people cheaper than Capital Research or American funds.
So you're saying this company researched the companies for you?
Yes, and they never bought a stock in a portfolio where they didn't actually go to the facility, walk the plant floor, go through the shops, talk to the management. And so it was a real kind of hands-on, they knew their stuff. So I felt comfortable and confident in using them with clients' money. So
yeah, we're kind of stuck
to do that homework and then put that money with that group.
We're stuck kind of with crypto. We're kind of stuck with almost the YouTubers and these personalities who do the research and then kind of posting their research. It's a little bit tough. You can do some of the research yourself, but you really, you go to a website, you read the white paper, there's not a whole lot you can do as far as the research,
And they're not regulated either, so you don't even know that there's no regulation that anybody can be. But Bitcoin and Ethereum are more established, so most of your money is in something that's
but even the other crypto that I'm into are like large market cap type companies, or a little bit more established, or I'm not throwing my money into like meme coins or anything like that. I try to put it into projects that have utility. So I don't know if you know too much about the difference between some of the cryptocurrencies, but some of them are just literally just a coin with nothing behind it that do nothing, right?
Let me tell you what I know.
Okay. Yeah, let's get into
that. It won't take long.
Okay.
What I know is crypto is a currency that can be exchanged just like any other currency, a dollar or a Deutschmark, and that its brilliance and what it brings to the table is this blockchain technology, which can have broader applications to the world. What I don't know and what I question, I guess, or wonder about is, when I was going to buy a stock or recommend a stock, I would look at like what's the company making, or what's its service, and how does it compare to other companies that are trying to provide the same product or service, and where are their earnings? How much money are they making from sales, and then are able to retain after they pay salaries and do research and pay the rent. And how does that compare to other companies doing the same thing, or how does that compare to how they've done in the past? How much debt are they carrying? How much is it going to cost them every month to repay any loans that they might be carrying? What's going on in the economy in terms of interest rate? Is their debt going to cost them more? So all of those things would sort of, you put them in a pot and come up and say, all right, look, this looks like a reasonable stock at a reasonable price. Let's buy it. What's done in terms of crypto to determine whether you buy Bitcoin or Ethereum, or you don't buy Bitcoin today, or absolutely you buy Bitcoin today, other than someone's opinion that, yeah, this is a good time to buy Bitcoin?
Yeah.
Where's the beef behind that decision?
So
Tell him. I'm dying to hear what you say.
the way that I understand crypto is there's many different kinds of crypto, and there's a lot of different things within the whole space. There's a lot going on, and I think Bitcoin is in a class of its own. I think that's really, it was designed to be more of a currency, but I think it's been kind of evolved into more of a commodity, sort of like a digital gold. So
A store of wealth that
a store of value,
people buy because they hope that it's going to go up to 1 million. Yeah.
but not just, not just that it will go up to 1 million, but that it won't go down as your dollars, with inflation, your dollars, if you put your money in the bank, your dollars are going to really be worth less 10 years from now because of inflation. So, why would you buy gold? It's not like you're not going to make $1 million. Gold isn't going like crazy like that, but it's at least a hedge against inflation. So, but now if you have $1 million in gold, okay, can you just hop on a plane? Say you move, can you just hop on a plane with $1 million worth of gold? You can't. Apparently, I just listened to someone else talking about it. Some guy did try to take, like, I think it was like 70 pounds worth of gold on a plane. He got arrested. So you can just put your, digital gold on a ledger, a little, device, and you go wherever you want,
Well, you make a good point. You make a good
well-
point that, crypto is you don't have the storage of crypto like you do with gold. That's
Yeah.
absolutely
And
the
do you
case.
nowadays, do you actually hold your gold, or does someone
Yeah,
hold
I
it
do.
for you?
I have a little, I have it both ways, really. And I will say this, the worst investment I've made over 50 years is gold. And I have maybe, the good news is, as a percentage of my portfolio, it's less than 1%. But I have gold coins, American Eagles, in my safety deposit box at the bank. And
Yeah.
I also own an exchange traded fund that buys gold mining stocks.
And if something happened to the financial system or whatever, you can just take your gold and do at least you have something, right? It's just something else that you could take to a different country and people will recognize it as, right?
Yes, and that brings up, that's the question I was going to ask you. Gold has had value for
Thousands of years.
People recognize gold as being worth something. Cryptos, Ben, I don't
new.
know.
Yeah.
It's relatively, so
2008.
that's
2008, I
2008.
think. Yeah.
Okay. So
Well,
that's
let me add,
2009.
significant
Let me, let
difference.
me let me make a comment here. This is what the YouTube people do all the time. Frankie's saying that your only alternative to cryptocurrency is gold or putting your money in your bank, and you're going to lose value. But people
It's
don't
not only.
generally put their money in that. They put it in stocks and bonds.
Yeah, I'm not saying it's
And
the
so,
only. No, they're
well,
not saying
but
it's
you
the
didn't.
only.
But I
But
know that. But
it's
you
a
made it sound like it was the only. It's
no.
either
I'm saying
cryptocurrency or that.
no. I'm saying I'm comparing it to gold. I'm saying that if you're trying to hedge against whatever, and you're trying to hedge your bets, or put your money in a couple different places, because real estate fluctuates, and with real estate, you're stuck in a spot. If you want to move, you have to you're still, your houses are still there. You have to sell them, and yeah, you can, and it's still a good. I believe in real estate as well. Real estate's great too. It's always done very well, but you are still stuck there. And if they change the laws or the tax rates, or they do whatever, you are stuck in that spot. You can't move it very quickly and easily like you could anything else.
Well, I
So
think people that
that's
have
just one.
investments in real estate or in the market, like Mike says, you have some in cash that
Yeah.
if you need it right away, you have some in real estate or whatever, and some
Yeah.
in your stocks you can always
I'm
sell.
I'm only advocating for um, a diverse portfolio with some Bitcoin or other stuff, other
Right.
crypto. And I'm not saying, oh, I'm not a Bitcoin maximalist and saying like, oh, only Bitcoin like Michael Saylor is. He's 100% into Bitcoin. He's got $4 billion in Bitcoin. I don't even think he has any other real estate. But even Bit Boy Ben Armstrong, he's, I don't know if you know him, but he's one of the bigger YouTube channels, and his portfolio at one point was up to, I don't know, 30 million or something, and it came back down to 10, but he took profits off of that and put it into real estate. So
Well,
I
he says that. Was he audited? Can he prove that? I mean, I don't know.
well,
These
he
people that
showed
say
us, but he
none of
shows
these,
his portfolio regularly.
well,
and
none of these
and I
people
think what he
are
did was
actually
the
regulated.
real estate. It wasn't just to buy. I don't think it was just to buy real estate. I think he bought a facility for where he's now, he uses as his YouTube studio, which is, I think, smart. Now you have real estate as well. But
I used to use this very simple but effective example. If you were going to design the perfect investment, it would be safe, it would provide a high return, it would be tax advantageous, and it would be liquid. And the reality is there's no one investment that provides all four of those qualities. And it's as if you're given four water glasses, each represents one of those things: taxes, high return, liquid, safe. But you've got the water to only fill three of those glasses. And
yeah,
so depending on where you are, you put more or less water, but you can't do it all with one investment. But back to my question to you, Frankie.
yeah.
What are the experts using? How do they, one, evaluate whether now is a good time to buy crypto? And number two, how do they decide what parameters, metrics, logarithms are they using to determine, do you buy Ethereum or Bitcoin or something else?
Got it. So with Bitcoin again, is different than the, because I want to get into the other projects to explain how some of these other things work. But the Bitcoin is, it has the cycles. I don't know if you know much about how the cycles work, but every 4 years, roughly, I don't know how many what was the number, Dad? Do you remember off the top of your head? It was a 400,000 blocks or however many blocks. It works out to be roughly about 4 years. Do you know how Bitcoin mining works, really?
Yeah,
So
you have to do the they have the computers trying to solve a
computers
mathematical
solve
equation.
mathematical problems to solve they all racing to guess the you know
Solve the
solve the
problem, and then
solve the problem, right?
they
And how
get
And
the
many,
bet.
they get awarded.
how many coins have been issued and how many are left to be issued?
So overall, I think there's 18 million coins that have been mined, right? And there's only 3 million left to be mined. But the way that it works is every 4 years, the amount of Bitcoin that is awarded to the miners for solving the block gets cut in half. So it's exponentially less and less and less. So yeah, over the since 2009 or whatever, when Bitcoin was released, they from then it's what been 11 years or wait, no, 14 years now that they mined 18 million Bitcoin. You think, oh well, there's only 3 million left, but it works out that it should be like 150 years from now before it gets the last one's mined, something like that. So it just gets exponentially less and less. And the way that the cycles have worked is, it kind of there's the halving when it gets halved, and it really does spike up, and then kind of comes down, and then spikes up, and then kind of goes like that. So on a timing issue, you kind of know when is the best time to buy. Like for me, I try to take the emotions out of it during the time when it was like really low, and I knew that the timing was right. Everyone was saying, "Oh, it's going to go down to 12,000, it's going to keep going." But for me, from what I believed and some of the other people believed was the timing was right for that's when is the lowest part of the cycle. And I bought as much as I could, and it worked out where there was around 16, 17,000. And now we're up to almost, we hit 30,000. Now we have a little bit of a pullback, but
Now,
it
do you
was,
have to, I used to tell people with trying to time buying of the stock market, you have to be right twice because you've got to get in at the bottom and then
yeah,
you've got to
out
get
at the
out at
top.
the top. When are you getting out?
So it should be, I think it's around a year after the halving or something around there. I really like, there's a guy called Plan B. That's his handle online. He has a good chart that's like color coded by the timing of when it is, and even he got um got his emotions got the best of him on the last cycle where he believed, he was like, what, I'm going to sell at this time. And when the cycle hits like orange or whatever it was, he was like, I'm going to sell at least half my Bitcoin. And everyone else, even everyone got caught up in this, it's going to hit 100,000. They were focused on the price instead of the timing, and everyone held, and a lot of us held, and we held through that top. So
All right,
it was
that's it. That's
confusing.
the optimist. That is the optimist viewpoint. Or the skeptics. Let me present what this.
Dad thinks it's all about the
Well,
with the what do you call it? When everyone was at home, everyone, with the
as an
virus
explanation of
going
why
out.
it went
Yeah.
up to 70,000.
Yeah.
But let me tell you. Let me explain to Mike. I spend a lot of time watching the YouTube video guys telling that are supposedly experts. And Frankie's approach explanation is how a group of people think like that about, and they consider the halving as a thing. But within that, all right. So when do you know when the bottom is? When is the top? And there is nobody. None of them agree on what the bottom is, because they say, oh, it's a bear market, we're coming out of a bear market, it's going to be a bull market, it's going to go up to 80,000, and this, they're all, I mean, it's clickbait for one thing. They're always posting these videos, buy now and all that. But I mean, there are guys saying, like, one of the most well-known, Gareth Soloway, right, 2 months ago was saying that Bitcoin is going to bottom out at 12,000, right? And the way they look at it, you have, the colored things. Well, they have these charts, and they call candles. Is it called candles? Like the way
Yeah.
the price goes up and down, right? So they don't know what's going to happen tomorrow, but they look at what happened yesterday, and they factor in that since what this happened yesterday is going to keep going this way. And so like this Gareth Soloway, the price was going down. He says, well, it's going to go all the way down to 12. So now it went to 16 or something. All right. So I don't know. So then it starts going up to 25, right? He said, well, I think it's going to go to 30. Now he changes his mind. No, I was
No.
wrong.
Mike,
It's
can
not
you
going
read
down to 12.
charts?
Not really. I mean, I suppose I
But
could.
you understand it well enough.
I can,
My,
I used to be able to read charts.
but
I'm
so
not as smart as I used to be.
my dad cannot. It looks like hieroglyphics to him. So he
Wait,
thinks
no,
that.
not true. I watched enough of these guys. They're basically saying what the chart, it shows the
What
movement of
he
the price. It's
Yeah,
only
but what
showing
he
the movement of the
fails to
price.
understand is
And
you can't know what's going to happen next exactly, but what you can from the charts,
agreed.
you can see what can the basically the two choices based on what will happen. If it does this, then this should happen. It's you're basically
let me ask a
But
question.
not like stocks. It's not like investing in a stock where
That
you can look
is
at a
stuff.
business that you can say, okay, this business is doing this,
You can
and I
still read
really like
charts
this
with
company. So they
stocks.
say Bitcoin is just oh, it's going up and down. What can we say about it? But if I'm going to invest in a corporation, a company, I can
Well, what would
look at their
happen with
earnings.
gold? You do the same. No, but you do it
Forget
with
gold.
gold.
Gold is trash like cash. I'm talking
What
about
you're talking, I'm
investing in a
saying when you
business.
look, but when you look at the charts with gold, when you look at what's a good time to buy, what's it going to do, you'd still look at charts with gold and can kind of
But that I'm not comparing.
analyze.
I don't care about gold. Gold is a
But
small.
when certain
The
things happen in
market
the
is
markets, no, certain things happen in
there's
the
a
market,
small
certain
amount
things
of
happen
what
with the
is being
banks,
invested.
and it affects the
Let me
price
ask
of
a
the gold.
question.
Yeah.
Let me ask a question. Let me see if I can remember what the question is.
Sorry.
I asked, like, how do you determine what to buy, when to buy, and you mentioned timing and the halving of this.
That's with Bitcoin, yeah.
Of the issue of with Bitcoin. So, if I was to draw a circle and say what that circle represents a stock price. Now, what's inside that circle? Well, a piece of that pie would be the earnings of the company. A piece of that pie would be the management. A piece of that pie would be the debt. A piece of that pie would be what's going on in the economy. What I'm hearing you saying is the circle that represents the price of Bitcoin. So far, all I've heard is inside that circle that represents the piece of the price of Bitcoin is the timing of the halving of the issuance of the coin. Is that if that's it, we just look up the date of when they have it.
Yeah.
And 3 months before, 3 months after, that's going to be the sweet spot.
Yeah.
Is it if it's that simple? It's that simple, but I suspect it isn't that simple.
Well, because other people are also kind of playing that game as well. So, I think what happened on this past cycle, when everyone's looking for an exact top, right, when it was going up, but we had like this double top. I don't know if you look at the charts. So if you look at it, I think on this past cycle, a lot more of institutional investors got in, and they were real smart with how when they bought near the bottom and they needed to offload their money, they can't just dump it. So I'm sure you're familiar with the Wyckoff, was it chart or whatever they call it, the Wyckoff pattern or whatever. Yeah. I think it's like a specific way that people will offload or onload certain kind of stocks to kind of manipulate the market. So that way they manipulate, emotions and whatnot to make you feel like, oh, it's going to do this, it's going to do that. And so that way they can offload it at their, get the maximum and then onload as much in the maximum. And if you line it up for how the top was on Bitcoin, it's almost exact, and the same way on this bottom. So I think that it was just a lot of manipulation for the institutional investors to offload and now to onload at the bottom. But I kind of want to
Wait,
talk about
let me just finish
all
the
right,
thing, the
yeah.
halving, right? So the symptom is the halving, and Frankie's saying that the halving causes the prices to go up and down. Okay, but what is the halving what is it that's actually that's making the halving change
Well,
the price, right? These
people mine
people
gold.
debate because, well, people are saying that, well, it's not there. The timing goes all over the place. It seems to run like that, but what is the actual function? What is actually causing the price to go up and down? And
Buying and
what is the
selling
halving?
pressure.
At the halving is that the miners, instead of getting 6 Bitcoin every time they solve a problem, they're getting 3, right? So they're saying, oh, now there's going to be less, and this is what they all say on
Well,
TV
so they
or
hold
whatever.
it and they don't sell it.
Well, they say that there's going to be a lot less Bitcoin, so it's going to drive the price up.
Not a
Well, the
lot
fact
less
is,
Bitcoin, less
no, there's not.
Bitcoin joining the market.
Right, because
If
instead of getting 6, they're getting 3. It's like it's such a
so, if you but
small
when you
part of the
want to
market.
when people want to buy Bitcoin, if there's no liquid Bitcoin, the price goes up because you need to have Bitcoin on the market for for people to buy it. Like mine's off the market. It's not in liquidity. No one can buy mine. I took it off of the exchanges. Um, so and there's a lot of I forget what the numbers are, but the majority of it is locked up. It's not out on the market. So
So the halving shouldn't make any effect on the price. It's not changing how much people are selling and
no, there's
buying.
less of it,
It's a small.
but there's less buying pressure, and it has gone up. But I kind of wanted to get off Bitcoin for a second so I could explain to Mike some of the other projects that have more utility, because I really feel like Bitcoin is like a store of value, and that's in a way to kind of keep your money safe and move it around and something like that. Where something like Ethereum is built on top of the blockchain technology, and then other things are built on top of that. So I've used Ethereum before, where I've used a certain kind of they call them dApps. It's a decentralized application or whatnot,
Mhm,
and I've in order to use it, you need to use a little Ethereum
mhm,
to be able to use it.
mhm.
And the way that they're doing this, I don't know, you've heard the term Web3. I don't know if you know much about it. Do you know what it is?
I've heard the term, but I don't know what it is.
So Web 1 is the original. I mean, it's not like there's no necessarily like upgrade from 1 or 2. It's just a way of using the internet. So like certain applications or websites that were on what they would refer to as Web 1 was just a read only internet. So like you go to a web page, you look at it, and it's just like the information about the company or whatever, a blog or something, right? Or not even that, because it would be someone else's, whatever you made the website, you posted the information, you just read it. Something that would evolve to Web 2 would be something like Facebook. So they created a website or a company, Facebook, and now we, as the people who use it, supply all the content. So when you're coming to Facebook, you're not coming there to read something that Facebook created. You're going there to read my dad's
Mhm,
posts or something, Twitter, all these things. But now when you go there and you look at the advertisements or whatnot, they're making money through advertising or whatnot, and they're making all the money. You're not getting any. You posted all the content, you did all the work, you're not getting anything. So Web3 is more of a way to decentralize it. There is no Facebook
mhm, mhm.
parent there. And now you, as the creator, you get if people came to your page a lot, you'll get more that revenue. So,
Gotcha,
and
gotcha.
it's kind of built on a lot of decentralized blockchain technology, whereas Ethereum is one of the leaders in that, and there's a lot of stuff being built on top of that. So that's why I think when you look at one of these companies, you say, well, what's the fundamentals, what are they doing, what can you look at? You would say, well, how many companies are built on top of it? You'll see, like Gala Games is something, and that's built on something else, and they're making all these different games that are decentralized, and now they're starting like a film company, and they're partnered with there was just something out in the news that they're partnered with Dwayne the Rock Johnson, like. And it's like, okay, well, this is interesting. So you're looking at sort of those types of things to see what they're doing. And then you have to verify, is this just BS, or is this are they really doing these partnerships and whatnot? So those are the types of things you could look at.
Yeah, well, that sounds more like a real sort of a business, more traditional business model.
Yep.
Okay, all right.
So if
like
it's decentralized, can I ask you,
yeah.
who curates it, who runs it, so if you're saying we put the content in, I know smart contracts write up all the things and the rules, but who upgrades the software,
The
and do they
developers.
get
So
paid?
this, yeah.
So there is,
this is, so I think each company kind of does things a little differently, but the way that I understand it, the way that it kind of works is that you get attracted, like certain companies attracts developers to come work on it. They're not necessarily hired. They come, and if you want to come work on the project, in the same way, like Wikipedia is supposed to be, what's that called when it's like open source, right? Anyone can come and kind of add to it or whatnot. I think some of these are supposed to be open source, where it attracts developers that come in and work on the project, and you get rewarded in either some of the coin, or I'm not a developer, so I don't know exactly how they're being rewarded, but they are being rewarded in that way, or being paid in that. So it's like getting stock options, I'm assuming. But that's again another way that you can look at projects. You kind of see, okay, I've seen different charts where I'm looking at what projects last year had so and so many developers working on it, and this year how many developers did they grow in developers. So that's another way that I would look at a project to see, are they attracting more developers, or are they declining in developers, are they leaving the project? Because on each cycle you have a lot of the altcoins, the other projects kind of go up with Bitcoin, and then they kind of come down, and you're like, well, are they going to come back? Are they dead, right? Or did they go up and then that's it? Or do you think they'll have a bigger one next year? So you kind of look at, well, did a lot of the developers leave, or are they attracting more? So that's another way that I look at projects.
Interesting.
But another project that I like, that I'm into right now, that has utility, is something called Render. We did a video on this, and it's a way to decentralize like rendering, so like GPU rendering or whatnot. So instead of just using your computer to solve these equations and whatnot, you actually lend it out to other companies who might need rendering services, or rendering projects. So instead of me buying a super hyped up computer to render out any kind of, say, 3D graphics, or anything like that. I know there's a lot of games and VR type stuff coming out, and it takes a lot of rendering computer power to do so. Instead of like getting my own computer to do that, I can rent out other people's rendering power, and so at least it's not being wasted as they're just mining coin. You're mining coin, but actually like using the computing power for something. So
how about I don't read much about it now, but it seemed hot for a while. In fact, my son, who you might want to get my son on as a guest. He's been a crypto coin guy for a long time, and he made considerable amount of money trading
He doesn't
NFT.
teach you about stuff.
He tries, and I'm like, Chris, stop, just stop. I can't
Uh,
take it anymore. But he traded NFTs all last year, was it, when
yeah,
they were so hot, and made quite a bit of
yeah.
money. And then I think he decided it was just time to get out, and I think he just walked
Well,
away from
smart. As long as he made some money. I have an issue with the crypto or the NFT craze that happened last year. I think there was a lot of hype around something. I think the NFT um, technology, there's something there. I just think it was hyped up around something that just wasn't really there. And it's like, why would we pay for this picture, right? Or basically you're getting a digital receipt for a piece of artwork, a digital artwork. And I think there was a lot of hype and people made some money thinking it was going to be huge and trading it. But also, I think it was like my dad says, and I think he's right on this. What people were doing is they're trading it between their own wallets. Like, I have this anonymous wallet and this anonymous wallet, and they're
it.
trading one to the other, making it look like, wow, the price is going up. Oh, I'll buy it, and then I'll sell it even higher, and then it doesn't sell for anything. So even the times where it was like going crazy, where somebody sold something for $4 million, it was like they bought it themselves to make it look like it was this huge deal, and it was just a bunch of hype. But I think the NFTs within the music industry and maybe textbooks and film, I think has some application. I think once they figure it out, I think it's going to be pretty cool. Even in gaming, I think could be pretty cool. Like, for example, I play Warzone. It's a game I play, and it's free online. And they sell the way that they make money is they sell skins. It's like, say you want to play as Rambo, right? They sell you a skin for $20. It comes with like a different kind of skin for your, you know what skins are? It's like it doesn't change your character. Like, you're playing with the same character, but your appearance in the game is different. Just something to be cool, right? On the game, that you're Rambo. Your character is now Rambo. It's got a different gun that just looks different. It's the same gun. It just looks a little different. And they make money selling them, right? The skin. And all they did was create the artwork that you buy for $20, right? But now if you but that's it. Once you have it, that's it, right? With NFTs, they could create that as an NFT where it is a digital one of one or whatever. It's like, that's one. Like, if you make a copy with an NFT, you can't make a copy. You know what I mean? Digitally, you can't. It is the thing. If I have this thing and I want to give it to you, like before, if I had a song on my computer, I have a song, I give it to you, but I still have it, right? You know, um, with this NFT thing, if I had that and I gave it to you, now I don't have it anymore. So there's a way in this game that you could then sell that right now in the game. I have that skin. Maybe it's um a sought after. There's only 50 in the game. Someone else wants it. I bought it for 20. I can sell it to you for 30. But the way that the game makers can make money is they set it within the code that every sale they make 20%, 25%, whatever, 50%. They can set it to be whatever they want. And the same thing can happen with music. Now, when they release a song on iTunes, I have that, but if I give it to you, I still have it, you have it, and we made a copy, and you're legally, you're not supposed to do it, but you can do it. How are they supposed to stop you? But with an NFT song, when I have it, I give it to you digitally. I don't have it anymore. That's how they've done it with blockchain technology, is it's on the blockchain. You can't, if I have a Bitcoin, I give it to you, I don't have it anymore digitally. It's only what it is. So I think NFTs can be used in that way, because like I said, they can also then make a percentage on each resale, whereas now they can't do that.
Hey, we're running out of time, and I want you to convince Mike why he should buy Bitcoin or Ethereum or something.
Well, all right, let's finish up that. Did that make sense with the NFTs where
Yeah, yes, thank you.
okay. So what let me ask you this. What's your reservations about possibly investing in Bitcoin or any of the other crypto? What are some of your concerns? Like what's stopping you if you were to do it or
I
thinking of
guess
doing
maybe I'm just thinking off the top of my head here. I think one is, what's the value of it, and to your point, I have the same question of gold. What's the value of it? Why buy it? It's only as valuable as the next person who's going to buy it from me.
it? Yep.
Um, um, I'm a bit concerned about security, that, and on that exchange, I forget his name, but that whole thing where that sort of that
FTX, Sam Bankman-Fried.
FTX
Yeah.
collapsed. So there's some security issues. I guess I'm not convinced that the blockchain is as impregnable as we'd like to think it is. I think I've read where there have been some instances where some blockchains have been impregnated from the outside.
Well, Bitcoin is to my understanding, Bitcoin has never been hacked
But
itself.
others have.
But
So we're
I
talking
think a
about
few,
crypto
yeah. Uh,
in
I
general.
and like you said, that other thing where the cup, right?
Yeah, yeah.
The 4 cups. I think with crypto they have the three, and it's I think security, the being the most secure, and decentralized, and then scalability. So that's the trifecta of you can like the more you go towards two, you lose one, right? And so
Mhm.
with Bitcoin, it was like really secure, and what did I say was the it's very decentralized, right? But it's the scalability of it is a little bit harder, because so the bigger it gets, maybe the slower it gets, or something like that, right? The block sizes get too big. There was an issue with that, um, but I think Bitcoin, I think, is the most secure. Where you run into issues is the on and off ramps. So sort of like your gold might be super, your gold is gold, right? But when you go to sell it to someone, you might run into somebody trying to rob you, or you might give them your gold and they give you a bag of paper. You know what I mean? That's, or you ask somebody to hold your gold for you and they're out there spending it and saying, no, 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 it's safe and secure, right? So that's kind of where you run into issues with Sam Bankman-Fried and FTX. They were holding your crypto for you. They hold it in an exchange, and that's, yeah, that's why everyone's saying, like, don't keep your crypto on an exchange, keep it in a wallet, and that's
I do have a wallet, by the way.
a real wallet, or a like an
Oh,
exchange wallet.
not in my back pocket.
No, but I mean,
Is there one called Fox?
I haven't heard of that one, but
It may not be a very, very
but
good one. But
is
I have
it
a
a
wallet. There's nothing
like
in it.
but a physical one or a digital wallet?
A digital
Oh,
wallet.
I use, well, because I mean, no, because they have, you buy like a little like a thing you plug in. It's called a cold storage.
Oh,
So
oh,
you
oh,
literally, this way you're literally keeping it offline.
I see, I
you
see, I see.
it's not
No,
even connected.
I have a digital wallet.
Yeah.
Um,
I use the Coinbase wallet because it's easier to connect to, because I use the Coinbase exchange. So if I'm exchanging things, if I'm trading or I'm buying stuff, I'm buying it there, and then it's easy for me to move it over. But I
well,
mean, it's
this brings up another point of why I don't buy it.
yeah.
I've got 35 years or a little more of experience with stocks, bonds, real estate, and this is a whole new field. So the vocabulary, the options, the analysis, everything, and my brain doesn't work as well as it did 30 years ago.
Yeah.
So it all feels a little overwhelming to me. Even this conversation about when you say, is it a real wallet, and I'm like, it's another fucking thing I've got.
I So
Another thing I've got to worry about with this stuff.
the thing is, I think if you are financially secure and you are diversified, I don't know that I would try to convince somebody to get any
Well,
Bitcoin
this is
or
the other thing.
Ethereum.
I don't need
Yeah.
I don't need more money. I don't
Yeah.
need to increase my wealth.
Yeah.
So why would
Yeah.
I
I guess
why
it's
would I
more of
try?
like a rainy day extra thing. For someone like you, it would be more of like, I don't know, something, you see, depends on where you even have your money. It's like, because we've seen some of the banks having issues. I don't know, Silicon Valley Bank, they had some issues.
Yeah, but
But it's like,
I've gone through that with clients too. So far, anyway, the FDIC, when back in 2008, a lot of banks collapsed, and a
yeah,
lot of my clients had CDs in those banks that collapsed. And overnight, the FDIC, it was seamless. The
yeah.
FDIC and a new bank bought that bank, honored the terms of
Did they
the.
have more than 250,000 or
Well, no,
anyone?
we made sure they didn't. But
You
now with my CDs, I've got them spread out so that I don't have anywhere near 250,000.
Yeah, so I mean, I think it's just one other thing, or if you wanted to play with it or, gamble on something new, I wouldn't even say it's something I needed to convince anyone about. It's just something for you to play if you were to even to do it. But for me, I see this as my like one opportunity where I see something early that not a ton of people see potential in, and I can get in with something, and if it hits big where I think it's going to, where I see a huge potential, then I can hit it big, and then from there I can diversify it. If I wouldn't keep it all in crypto. I'd be buying real estate and
Do you have a
some
drop dead, do you have
ETFs.
a drop dead date by which either you've hit it big or you say, you know what, this isn't working. I better go old school and get some CDs, get some stocks, get some bonds.
Well, this is it. I'm not putting any more into crypto after like this cycle. This is it for me. So
But what are you going to do with your with the money that you would have put into crypto? Where is that money going to be
I'm
in
saving up for a down payment on a house.
the
So
house? I think
something,
that
yeah,
makes good sense. Yeah.
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 So
Okay.
something in Florida, maybe. I don't know, where it's cheap. I can get a house.
Yeah.
I don't know. Come have these arguments with dad in person. Something like that. But all right. Well, if you don't have any more
Well,
questions,
this
and
was fun, and thank you for inviting me. I
thanks for
enjoyed
coming
it, and
on.
I learned something, and I hope I was worth your time. So
No, it was. Yeah, it was really fun. So if anyone else learned something and want to see more like this, please like and subscribe and leave some comments. Please ask us some questions like what you'd like to see in the next video. But thanks for joining us, and until next time, we'll see you later.